Good evening, good afternoon, good morning from wherever it is that you're watching this presentation from. My name is Robert Mbogo, and today I want us just to cover the MT5 refresher. Basically, we want to have a look at what the MT5 is all about and see whether we can learn a thing or two, and especially for those guys who are new, maybe they can get to learn what the whole trading platform is all about. So let me share my screen so that we can start off by having a look at the MT5 here. So I know, I'm sure you can see my screen. So as you can see from this presentation here, this is a basic outlook of the MT5. So here you have, this is my demo account. And over here on my left, you can see the market watch. Basically, this is where like you get to look at the assets listed. So you have different assets here. You have currencies, you have cryptocurrencies. You can add anything that you want. All you have to do is make sure that you've set that out and then say add. Let's say you want to add energy, oil and gas, then you can add that and it should appear at the bottom. So you have that Occidental Petroleum and Robinhood markets. So your work as a trader is to make sure that you've minimized the number of currencies that you have assets so that you don't confuse yourself when you're trading. So this is just an example of what you need to do as a trader. Make sure that you have this on your chart. So there's another thing now. As you let's see the charts. When we come back now to the chart window, we can see we have a currency here. We've opened GBP USD as our currency. So you can change this if you're a fan of bar charts. As you can see, it has changed to bar charts. If you're a fan of line charts, then you can use the line charts. But basically, the most commonly used is the candlestick chart. And so as you can see, it's kind of noisy. We can see the bullish candles and the bearish candles. So what you need to do is, first of all, I would want to remove this grid. And basically what I'll do, I'll just remove the grid. You see now the chart is kind of not shouting, it's kind of clear. Then go to properties. And that now, I really now want to have a look at what we have here. So let's go to show. I really want to look at the ask price because we can only see the bid price. So you add ask price there, and then period separators. Basically, you want to know where you are when yesterday, today, the previous day. So this is now what you call the period separators. Now we can go to the changing of the candlesticks. Maybe now you want to adopt, let's say, red for the bearish candle and white for the bullish candles. Yeah. So bar up, we can choose white. Bar down, red. So bullish candle, white. Bear candle, red. So this is now how you customize your candles. And this is, as you can see, this is now a customized chart. So maybe so that you make sure that everything that comes after this appears this way, then you'll want to change, you'll want to save. What you need to do is just save this template. Yeah. So come here, choose the word save template. So that you can have all your assets in the same white and red, then you'll want probably to use the word default. So save everything as default. So what happens is that let's assume you want to open USD JPY. So you just come, click the asset, say chart window. So as you can see, we've opened the chart window on USD JPY, and it has opened using the default setup we have created here with GBP USD. So that's a simple way of creating a template, and you don't have to go back setting out every currency. Like, let's say if you didn't use a default template, then you'll have to keep changing every other time, selecting that and saying that I want to adopt this as my default. For example, as you can see, this is Coca-Cola. Coca-Cola, as you can see, has a totally different template. So we can come here, template, choose default, right? So you see the default template now becomes now the new template. So instead of having that every time you're changing, let's go back to Adidas. These were pairs that were open before. Instead of doing this, just make sure that the next currency you open, just choose that template as default. Then that means that every other time, every currency pair that you open will have this kind of candles. Now that's how you determine this. Now let's look at ways of making sure, like, let's say, for example, we know there are traders every time when the trade is about to play out, yeah, and you feel like you've missed out on that move. So instead of coming in every time to come and say place new order, which is what you would normally do, come place volume, start setting out, and then say, let's say, sell, right? Because it's market execution. You want to do that directly. So what the alternative is, you should have this, the one-click trading. So as you can see here on my left, there's the current market prices listed there. So alternatively, now what you need to do is, let's close this. So you can just come here and say sell. So it will open directly. So this is a situation where, like, you're not patient. Maybe you've come in and realized, you know what? Oh, the market has just moved 2 pips or 3 pips away from my predefined entry, and I really need to get into this trade because I believe this is an area, maybe an area of support resistance, and I believe this is this trade is headed towards my projection. So in that case, you would want to come in, and so that you're not missing out. So make sure that you have these one-click trading lined up. In case you want to remove it, just you'll just do that and remove it. So that is one of the way. That's one of the ways of taking trades instantly. Now, in this trade, let's assume you want to take, like we already have a sell trade over here. I said one of the ways is having a new order where you'll come in, set out these parameters, say, you know what, I want to buy GBP USD at current market execution. So volume that, set out the stop loss, say, because it's a sell, then the stop loss should be up, let's say 20 pips up, so 76, and then take profit, let's say 40 pips down. So in that case, if it's 40 pips down, then you should just come set it out. That will become 2016. The reason why I've chosen 20 as a stop loss and 40 as a take profit is because of risk to reward. As a trader, you should make sure that every time you're taking trades, then your risk reward should be more than 1:2. That means you're risking 20 pips to garner 40 pips. So that way you're able to maximize on every trade that you take. So in such a scenario, then using the new order, then you'd have to do that and say sell. So that trade becomes active. So in the case of the above scenario, where like we have not yet set out our stop loss and our take profit targets, what you need to do is you have 2 options. For example, the upper trade. Let me cancel this trade. We have this sell trade, right? So what you can do is you can shift, just click the sell, sorry. You can move your stop loss. As you can see, as I move my mouse, I've clicked on the chart and left clicked it, and I can see the points. So let's say 20 points, sorry, 200 points, which is 20 pips, you can choose that. Won't be exact. Now, this is the challenge that you'll face, yeah? That's 20 pips, stop loss. And then for the take profit target, the same thing. Click, left click, and then move down 40 pips. So in this case, 400. So as you can see, it's at 500. So we can do with this one. We can set it out at, let's say, 600 pips, which is 60 pips. Yes, so that is one of the ways you can set out your stop loss and your take profit targets. Alternatively, you can just come here, say modify order. So in this case, the stop loss, you just come here. The numbers are, we've already set them out already. So you just come here, punch in the numbers. Oh, it's already 200 points, 20 pips. And let's say, let's modify this to the 600 points. Or let's do the 1:2, because now this one is 1:3. Let's do the 1:2. So we go for 400 points, which is 40 pips. So once we adjust that, you say modify. So your stop loss and your take profit targets have already been set out. So in this case, what this means, basically this is what you're telling the broker. You're saying that I've set out my limits, that when the trade gets to market price 1.20868, close that order. I'll be comfortable with that loss. I believe that's the amount I'm ready and willing to lose. However, since my analysis is bearish, if it hits this level 40 pips away, 1.20268, kindly close this order. I'll be comfortable with the 40 pips. So that in by itself gives you comfort, knowing that you already have you've already set out your parameters, and you can move out comfortably, knowing that your analysis is on check, and whatever it is that you anticipate the trade to play out, let it play out. Let the market forces determine whether you're right or wrong. Remember, as a trader, you should always come in with a certain probability. However, never be too overconfident such that you're not using a stop loss. Just make sure that you set that out. Now, there's also the other option. You could probably use trailing stop loss. So what you need to do is just come here, click, modify, and then basically you can set out, you just need to make sure that you already know what the trade is, whatever the trade is playing out. You must identify that this trade could pan out in a way that the trade hits a stop loss earlier. So this is the danger of using a trailing stop loss, and most traders, I believe, there's a reason why they choose not to use the trailing stop loss. Personally, I've never used the trailing stop loss because you get to be kicked out of the business earlier than the anticipated time, right? And I believe as a trader, you should, maybe as you learn, probably as you're starting out, you'll have fear, you'll have that impatience playing out. But the moment you become confident with your trading strategy, you know that that trade could hit your stop loss or even hit your take profit without so much of ado. But then that is something that happens in the market. So be comfortable with the losses that you make, be comfortable with the profits. I always say that in this business, you should always treat trading as a business. That means your take profit targets should be lined out. Your stop loss should be lined out. So that means you've projected that that trade could hit your profit or your loss. So just like every other business out there, there's a time you'll take a loss in any business. But the thing you should know is that as a trader, you should make sure that your profits are more than your losses. Yeah. So that's the only way you maximize your trading activity, by making sure you have more profits than losses. Now, let's go back to something else here. I wanted to look at how to set out indicators, right? So for example, we just come and you want to set out indicators. let's say you want to use the moving average. Let's say you want to use the EMA, let's say the 50 EMA. So you can come here, say the exponential EMA at close, then maybe change this to a blue color. And then say, okay. So as you can see, the 50 EMA will be set out on your chart, right? So that is how you set out your moving average. Now, all you have to do, make sure is that you go to indicators, set it out, and then it should be there. Now, let's assume you want to use the RSI. Let's use, let's say 21, right? So just click yes, and then the indicator window will come down here and you'll have set out the RSI. So always understand that when you are using indicators, these should come in as confirmations. They should actually, you should use indicators as part of your confirmation, but not as a reason why you should take that trade. Let indicators help you in sieving those bad trades, just like a stop loss is supposed to sieve the bad trades. Unfortunately, a stop loss, you'll be kicked out. So that is something that is one of the ways of installing indicators on your charts. Now, let's have a look at something else here. There's something called timeframes. Basically, this is where like you have timeframes over here. You have M1, M5, M15, M30. So what does M1 mean? Like, for example, in this case, M1 means that all this price action happened in 1 minute. So in the next few 2020, this candle should close and we should have another candle coming in the next 30 seconds. So basically, as a trader, you must identify, you must be able to read what these timeframes represent. Yeah. So if you're talking about M15, this represents candle activity in the past 5 minutes. Yeah. Let me do something here. So every action here, you see, this action has been in the past 15. So 2020, if you go back to 1 minute chart, you'll notice that this candle that was playing out in the 1 minute chart has closed, and now there's a new candle. So this is the action of bulls and bears trying to, you know, fight off the market, because this is all about buy and sell, right? Just like every market out there, for us Kenyans, we talk about the soko, pale sokoni, where like you're meeting out buyers and sellers, bargaining. So this is all about buyers and sellers in the market. So if you go to H1, every candle you see here represents 1 hour activity. H4, every candle you see here represents 4 hour activity. D1, this represents daily activity. So let's say like this white candle over here represents yesterday's price action, right? This one represents Monday's price action. Today, this is today's price action. Weekly, every candle you see here represents the past 1 week. For example, this was last week. This is the week we are in currently. And then monthly, of course, this candle represents last month's price action. This one represents December's price action. And of course, now this one represents February's price action. So always get to understand how to read the candles. Now, there's something else here, how to use a crosshair. Let's say you don't have that patience to calculate how much pips you need. Then maybe you can come here, use a crosshair, and the crosshair will tell you that from this point to this point, that's 644 points, right? So 644 points, that represents 64 pips. That's 64 pips, and those are 7 bars. So for example, let's have a look at something here. today's highest point, right? So the highest point GBP USD today achieved was this level, yeah? So we can use this horizontal line to mark out this area. That was the highest level, but you can always see them on your market watch, and you can always identify the highest point based on these figures given here. So in that case, you want to look at also map out the lowest price, right? So lowest price will be that. So to calculate the difference between today's highest point and lowest point, then this is where the crosshair will come in handy, so that you just use that, and it will give you that. So today, the difference between the highest point and the lowest point is 728 points. That's like 72.8 pips. And so the highest candle, from the highest to the lowest candle, those are 35 bars. So that is how you use these tools to map out your trades. So that is about it. Now, if you want to zoom out your chart, then this is how you zoom out your chart. Maybe you would want to make sure that you understand these and click these also. That's how you zoom out. Now, there's also moving left. Yeah, there's a challenge where traders are unable to move left. Like anytime, let's say you move this way, it will, in most cases, if you've not set it out, the moment you move in a certain direction, then price tends to go back to the current market price. So to make sure that you don't have that challenge, always click that, and it should you should be able to scroll through your charts backwards. Let's say H1. You should be able to look at what has been happening previously, and that way you're able to look left, trade right. I believe as a trader, your work is to make sure that you understand where price is coming from before you make your anticipation or your projection. So to go back to where price is, you just need to click this. You just need to click here, and it will go back to where it is that you want price to be, which is the current market price. Now, for example, once you've mapped out your charts, maybe you would want to screenshot your charts. Maybe you're the type of a trader who wants to journal their trades. So what you can do is that you can see these symbol here. So you just click that, and then it will give you active chart. Where do you want to save it? Say okay. It will bring you that folder where you should be able to save your chart. You can name it GBP USD H4, just like it is. Maybe you can add your own thing and then say save. So you should be able to retrieve that screenshot and see what it is that you have screenshot. So this is an example of that screenshot. Yeah, so you can save that and see this is how price has been behaving. Maybe you're trying to map out your entries, your exits, so that you understand where you went wrong or even where you went right. Because when you're journal, the purpose of a journal is to make sure that you're documenting everything in your trades. Yeah, so that you're able to know where it is that you made where you went wrong or where it is that you went right, so that you're able to improve your trading system moving forward. So that's basically what I was looking at today, so that you guys can understand more about the MT4. This is more of a refresher, doesn't have much, but yeah, not unless there's a question. Let me see if there are some questions. Okay, hi Felix, hi Michael. So now when you're scaling in, let me draw something here. Let me answer your question. first you must identify the trend, right? That's the most important thing. Once you identify the trend, then you must know where you are in the market. So let me draw something here. Let's say this is a bullish market, right? So you have that, there's the retracement, and then market moves, and then the retracement, and then you have that, and then let's say that. So when you're scaling in and out, you would want, let's say you took an entry here, that was your buy, right? So if you took a buy position here, then maybe you're looking at a retracement. So when price comes here, let's say it could even come to this neckline, right? So you have, instead of that, you have market get to these, and then maybe join the uptrend, right? So you could scale in here. You could add another buy position here based on confirmations. Remember, you must understand the main trend. What's the major trend, right? So that you're not counter trend trading. If you decide to enter here as a sell, then this will be a counter trend trade, because the analysis basically is bullish, because maybe this was a strong major support that held, yeah, maybe on the daily, maybe on an order block, or even maybe you had an EMA right here, which acted as a strong support or resistance. So you'll want now to come, scale in and buy, take another buy position here. Then, of course, in this case, you'll want to set out your stop loss around here. In this case also, your stop loss should be somewhere around there. So once you take this buy position, wait for the next trade. Maybe you could decide to take profit here, book your first take profit here on this trade. Yeah. However, this trade you could turn this to be a swing trade. Yeah. So you could turn this to be a swing trade, so that you're able to maximize on the number of pips. So this retracement, once again, if price will come here, maybe retest this swing here. So you could add another buy here, but of course, this is where you'll need to have a string of confirmations before you take this buy, right? So you can take a buy here, have a stop loss here, right? And then maybe take profit here, up here at the top, right? So that is how you can scale in and scale out, right? So you're taking advantage of every dip. Every dip is an opportunity to buy. The reverse is true when the market is bearish. If the market is bearish, then you would want to look at the same kind of a setup. So in this case, you want to make sure that it's sorry. Wow, I've lost my whiteboard, but that's okay. Yeah, we're back. So in this case, you have that market that is dropping. Then in such a case, then you would want to map out. Oh, sorry for that. Oh, yeah, I need to choose not a vanishing biro. Where is it? I seem to have lost my biro. Hey, what's up? Sorry, I seem to have lost my pen, yeah? But the same will be on a bearish market, right? Where if you're looking at market dropping, yeah? In this case, let's say, in this case, you're looking at this setup. Let's go back to our chart, yeah? If in this case, this is the chart you're looking at, yeah? H4, right? So you'll want to make sure that this is a, for example, in this case, this is a bearish market, right? So this bearish market, maybe you would want to look at this move down here, where like you have this, and then you have this kind of a scenario, and then maybe you have this drop, you know. So scaling in, for example, in this case, we already have a sell at around this area, right? We have this sell at this position. So you'll want maybe to come take another sell position at around this retest. These are the retest. Because you want this to coincide with this, yeah? So you can take this so that because you're looking at this opportunity maybe to drop. So you can take this sell position here and wait for the market to move, right? So that is one of the ways you can scale in, right? So I hope I answered that question. Thanks. Okay, Michael, thank you. I answered your question. Hilary Mwangi, help me connect my MT5 with Michael, back to your question. The time frame does not matter, right? What matters when you're setting out your stop loss is your risk management. What is your risk to reward, right? So the entry, whether in M15, H1, shouldn't matter. Your risk reward is the most important thing. You're risking 20 pips to gain 40 pips. You're risking 20 pips to gain 60 pips. That is a risk to reward of 1:3. So that means for every 20 pips, there's 60. You're risking 20 pips to gain 80 pips. That is a risk to reward of 1:4. You're risking 20 pips to gain 100 pips. That is a risk to reward of 1:100. So it doesn't matter. The timeline, the time frame shouldn't matter. I hope that is clear, Michael. Yes. So let me go to Hilary. Help me connect my MT5 as my broker, please. I want to start trading. So Hilary, let me go back to my chart. Now, if we go back to this chart, if you really want to, you must make sure that you understand the navigator. So what you need to do is click here, navigator. You should come here. This is already an account. It's already active. So in this case, you just need to select an account here and then say log in, right? It will give you login to a trade account. Then once you say login to a trade account, you should be able to put in the login details. Remember, these login details were sent to your email because I believe you have an FXPesa account. And then, of course, the password is the password that you changed when you are in the portal. And then you need to select whether that's a live account or a demo account. And then you just click OK. Then it should automatically, you should be able to access your account. Hilary, I hope I've answered your question. In case you have any challenges, kindly reach out to any of the satellite offices. I don't know where you are located because we have satellite offices in Thika, where I am currently. We have a satellite office in Kitengela. We have an office in Nairobi, Nakuru, and even Eldoret. So, and even Isli, sorry, I'd forgotten Isli. So just in case of anything, but we can guide you. You can always send a comment via your comment in the YouTube channel, and then someone will guide you accordingly. I hope Hilary have helped you with that. I believe there's no other question. So at this point, I would want to say thank you to everyone who's attended this session. I look forward to having more of these sessions. If you feel that you need more education, please, before you start taking trades, make sure that you have the right skills, right knowledge. Just attend any of the satellite offices where you'll find materials there. You can also visit the FX Pesa YouTube channel. Have a look at all the materials there, and especially the Novice to Pro by Rufus Kamau. That is a really awesome guide for everyone who's starting out to trade. I hope I answered that. Otherwise, have a good time, guys. Cheers. See you next week, God willing.